Well, good afternoon. Time to check in on those markets as we wrap up the week. Starting off with things on the Asian side, we saw mainland Chinese markets dropping more than 1% after Chinese GDP numbers missed estimates. Those showing that quarter-on-quarter GDP dropping 0.4% versus the 4.8% that we saw the previous quarter, that is quarter one. This is the lowest number since the Q1 2020 GDP figures that came in at the height of the pandemic. Nonetheless, the Hang Seng Index dropping also down 2.1%. Looking at things from a currency perspective, the Rand continuing to hover around a 23-month low. This as dollar strength continues to weigh on the currency. We also had news coming out from two Fed presidents saying that they favor a smaller rate hike to support the economy and, of course, deal with inflation, saying that they'd be looking at a 75 basis point hike as opposed to the bets that the traders have placed on the market that the July 26-27 Fed meeting will be looking at a full percentage point hike. Nonetheless, locally, Africa's biggest mobile operator, MTN, saying that they are looking to acquire Telkom shares rallying by 30%. And of course, MTN up 3.9%. Whether this will be third time lucky for MTN remains to be seen. Nonetheless, we're also tracking developments out of Tongaat Hewlett after the company announced on Sense that they have requested a suspension of trade for their shares. This is after they failed to finalize their financial statements. To look back at the week that was and, of course, touch on the latest market developments, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. Let's start off with that GDP figure from China, missing estimates. What does it say then about the state of the Chinese economy, that massive target that they have to achieve GDP growth towards the end of the year? What sense are you getting from that figure in terms of what's happening on the ground?
Well, I think it's certainly a very uncomfortable figure, and obviously China will be very disappointed with that. But I think what I can say is looking through in certain subsegments, I mean, retail sales up 3.1%, industrial production up 3.9%, fixed asset investment up 6%. So looking in between there's some fairly positive looking green shoots there. And I think it's important to recall, and I mean, we will have seen it in multiple economies after the whole series of COVID debacles, is that do recall that recoveries from epidemic fueled slowdowns often tend to be quite sharp and quite fast. So I'm not slashing my wrists at this stage. Obviously, I think quite a broad sense of disappointment out there. We've seen quite a lot of discounting in the likes of the commodities market and so on. Clearly, looking at the performance in the last couple of weeks, it's been expecting a terrible number, and this was actually even slightly worse. But like I say, I think we can see the green shoots somewhere in amongst the weeds.
Speaking of green shoots, we're looking at European markets and they are higher. How's our JSE holding up?
Okay, so I think as far as the last weeks go, it's of course been an absolute graveyard. And I think, look, a big part of that obviously has related to resources. I mean, sort of month on month, the resources is down nearly a full technical bear market. But of course, we expect that a little bit from resources being so volatile. And the likes of the CRB commodities index as well, brutal couple of months there. I mean, that's also down well over 15%. On physical commodities, so we can see some real noise coming through there, and I don't see it stopping.
Right. The other news that came out, and I mentioned it in my intro, MTN having a third go again at Telkom. Telkom shares rallying 30%. Your thoughts on that, given the fact that some might say this is not great for market competition. It might cause a concentration, especially when we're trying to get low prices for consumers.
Yeah, absolutely. I mean, it always was going to be a tricky one. I mean, in terms of the share price responses, that's pretty rational there, particularly Telkom going higher. But interestingly also MTN. And the key issue there is that these are network type businesses in terms of their structure. In other words, you build a huge base, and then what you do is you try and build as much traffic on top of that base as you possibly can. So what you have is a situation that the bigger you can get the business, the more competitive it is because of the way you recover your costs. So here's the issue. I mean, if we look at how Telkom sources a lot of its bandwidth, well, it's actually buying it from MTN anyway. It's roaming on the MTN network. So if we have, so we say, lots of segment type competition, you actually wind up own goaling yourself. So I think the key question in terms of dealing with competition is, do they get restructured in some way if they're going to do a get together here, or do they get forced, for example, to a certain amount of cost-based wholesaling of bandwidth? So that could be quite an involved discussion. But certainly, I mean, the likes of MTN are very cash flush, and they do have a capacity to digest an acquisition like this and make it work for both of the businesses.
Unfortunately, Warwick, we have run out of time, but of course we were going to touch on U.S. earnings season, having Wells Fargo reporting their financials right now. Profit falling as the bank sets aside funds to deal with bad loans, and in pre-market trade, that share dropping 3%. Nonetheless, we will continue with our market coverage, looking back at the week that was and touching on those bank earnings on Monday when we do return. That is it from me.